Alrighty, what is up everybody? Now I know I've been gone for a couple days, but hey, we are back and we're looking at NuCypher. Now if you haven't seen the stream or the channel before, welcome. Hit that subscribe button if you love completely unemotional technical analysis. I will always tell you never listen to anybody on social media, but I will tell you what the technicals say. I will tell you the probability of something either going up or down, and I'll show you why, and I'll never try and sell you a course in the meantime or during any of it. So we're taking a look at NuCypher, and if you have been subscribed, you know we played the 20 cent to 30 cent jump on NuCypher, and here we are at 76 cents wondering what on earth happened. Right, we were distracted. We played Ripple, 37 cents to 72 cents. We've played a lot of these plays. We played Dogecoin, 4 cents to 8 cents again. So we've been really distracted. Matic, 8 cents to 12 cents. I mean, so we took a look at NuCypher here, and wow, we jumped all the way up to 88 cents. Now, some people are going to say that they're going to look at, like this right here and say, man, we've really dumped. And that's fine, but I'm going to show you why we really haven't. Now, first off, when looking at this is a bullish chart. Why is it a bullish chart? Well, we're consistently making these higher lows, right? Consistently, which would mean, maybe around here we bounce again. But let's dig in a little deeper. First off, let me remove all of these drawings I just put on here, and we're taking a look at the 15-minute time chart. What is a 15-minute time chart? Well, no matter what chart you're on, you will have all of these time frames. This 15-minute time frame is simply candles represent 15 minutes of price action. So each one of these little candles you see is a 15-minute time frame of the bulls pushing the price up, the bears dragging the price down, and the candle will close every 15 minutes. You can see on the right side we have 14.5 minutes left in this current candle. So the first thing we want to do is take a look at where we are and how we got here, because knowing what has already happened is the only way you can get that probability of what's going to happen next, right? Because patterns repeat in life, patterns repeat in mathematics, patterns repeat in the stock market, the forex market, the crypto market. It's just what happens. So we are going to go, and we're on tradingview.com, completely free to use to practice your charting. Of course, they have paid stuff down the road, but I have no affiliate link for you. I don't get anything. It's just a free place where you can practice your charting on a live market. So we're going to go to the left side here, and we're going to grab the Fibonacci. Here, I'll make sure you can read it. The Fibonacci Retracement tool. Now, this tool lets you see where a retracement could stop, right? So we have this bullish run up and this pullback. Okay, pullback, or also known as a retracement, will end somewhere, and being able to kind of guesstimate or make that educated guess on where it's going to end is why we use Fibonacci retracement. So we're going to grab the tool, and Fib retracement needs 2 points, so we're going to look for the start of this impulse or this run up. Now it looks to me like the start of the impulse here would be right about here. Well, actually no, right about here we see a run up without making a lower low. So we could take this point right here, but we had this low, and then we made a new low right here. So this is going to be the start of the impulse or the move up. So point A is going to be the bottom of this impulse. Point B, which we're just going to drag it, is going to be the top of the movement or the end of the impulse. I'm going to drag it to the side so we get a little bit more of a view. And you can see not only once, but twice we touched this 38.2% retracement level. And it looks like maybe we'll touch it a third time as well. Now, it does look like we are finding multiple levels of support right here. So I don't see us going any lower than the low that these wicks found, which if I draw a line in, would be 725. Now this is just technical analysis. None of this is including fundamentals or catalysts that could be launched in the news either 24 hours ago or 24 hours from now. So technically it looks like we are finding support at the 745 level with a 725 maximum downside, at least on this move for this time. Now, nothing you see or hear in this video should constitute an entry or exit into or out of any position, no matter what. You should never listen to anybody on social media. You should always do your own due diligence and your own technical analysis. So let's look at a couple other things here. The other thing we can do is take a look at our index. Now this is the RSI, or Relative Strength Index. All this does is this shows buying power coming into the market and inversely selling power coming into the market as well. So we see the peaks right here. Now we are making these lower peaks, but we're not making higher highs, which means there's no bearish divergence, right? We're completely good. This downward flag that we're making, which this is a bull flag pennant, right? And we can actually chart that here. Okay, we're making this pennant of a bull flag, and if you don't know charts at all, I would definitely suggest researching basic charting patterns, as the bull flag, bear flag inversely are some of the most general patterns that you're going to come across, and some of your easiest patterns to read are bulls and bear flags. So on the stochastic, we have a lot of room to move up. We could be just crossing on the MACD here, right around here, which we can go down to a lower time frame, 5 minutes, to see, yes, in fact, we are just about to cross. So what we could see here on NuCypher is some movement like this in and around the bull flag until we finally break. We will have to retest the top of this pennant before we go higher, but it does look very possible for a movement higher. Now, if we do move higher, where would our price target be? Well, for that we're going to use a tool called the Fibonacci Extension. Now, like the Fibonacci Retracement, this does require point A and point B, but it does require a third new point, right? It requires point C. So we're going to take point A, we're going to drag it to point B, and now point C is going to be where we actually found retracement, which is going to be right here. It's the lowest point we found retracement, and this will give us the possible extension upwards. Now what I'm going to do for this to drag the chart up is actually unlock the chart. So on TradingView on the bottom right, it's this auto button right here. You click that and then you can drag the chart upwards. Now looking at this chart, we had a pretty much 70% move to the upside here. So I would be looking right between the 618 and the 786. Okay, so my price target for this next move on NuCypher would be, I would put it right at $1. So I would say if NuCypher does maintain this bullish trend, now bullish trend meaning we would have to maintain above this 50% retracement, in my opinion, the 70-cent mark. If we can remain above the 70-cent mark, then I do believe that $1 is going to be incoming, fairly soon. Now this isn't a guarantee. I'm not a financial advisor, nor am I a professional trader. I'm just a guy that loves charts, math, and money. So if you're someone that is of a like mind, hit the subscribe button, and whatever chart you would like me to read, leave that in the comments below, and I can definitely make a video analyzing that. Now if you want to see it live, you can come by the show, as we generally try to be live Monday through Friday, 7:30 Mountain Time to 11 Mountain Time. So stop by the live stream, we'd love to see you, and I will be putting out more of these charting videos, but NuCypher just looked really, really good. Take it easy, guys.